Hello and everyone. Thank you for watching IndiaMoney.com. My name is Vivek Bhaskar, and on this edition of IndiaMoney.com, I will be talking about tax planning. But before we get into tax planning, we need to understand the entire tax system as well as the types of taxes and also the various aspects involved while you're doing tax planning. So let us begin by discussing the tax system. So, what exactly is tax, and what exactly is a tax system? Well, tax system came into existence years ago. It's been said that even during the ancient times, the ruling kings had imposed taxes on fellow civilians as well as traders of those days. So, in the modern era, tax can be defined as a certain fee or a contribution made by the individual or a business firm towards the state revenue. Now, this could vary depending on the income or the business profits of the entity. Now, taxes could happen otherwise as well because we do have goods, services, and other transactions happening in the society, and government could add a fee to the cost of certain goods, services, and transactions, which could also act as taxes to those goods, services, and transactions. To understand this concept better, let us talk about the types of taxes first. Which are the different types of taxes? Well, there are two different types of taxes. One is a direct taxes, the other one is indirect taxes. So let us talk about direct taxes first. Direct taxes, as the name implies, it is imposed directly on the entity. It could be an individual, it could be a business firm. Now, like I said, it differs or it varies depending on the income and the business profit you gain over a period of time. This is what you call as direct taxes. Now, a perfect example of direct tax could be income tax. Let us say an individual working for an organization earns a certain income, and based on the income, he is liable to pay a certain amount as tax, which is a contribution towards the state revenue. The other type of tax is indirect tax. So, what exactly is indirect tax? Well, like I mentioned at the beginning, there are goods, services, and other transactions that are available in the market. So, any individual going out to purchase these goods, services, and do other transactions are liable to pay a certain fee as tax. So this is the other type of tax. A perfect example would be GST implemented by the central government of India recently. So GST is a perfect example of indirect tax, and income tax is a good example of a direct tax. Now let us talk about different types of, or different components of the tax system in order to understand tax planning better. Now tax planning is only one of the main aspects. The other aspects being tax avoidance, tax evasion, and of course, tax management. Well, tax management is nothing but managing all the other three components, which is tax planning, tax evasion, as well as tax avoidance. To understand tax planning better, a simple way of putting it is by ensuring minimum tax liability. Whether you are an individual or business firm, you are ensuring minimum tax liability by staying within the framework of the government system. So, to make it very simple, there are certain benefits, or there are certain advantages are given to us, provided to us by the government, so we can stay within those framework and ensure minimum tax liability. This is nothing but tax planning. To understand tax planning better, let's also differentiate tax planning from tax avoidance. What exactly is tax avoidance? Tax avoidance is nothing but using the loopholes of the legal system that exists. There might be many loopholes that are there in the legal system. So if an individual or a business organization is using these loopholes to ensure minimum tax liability, then it is called as a tax avoidance act. Now, coming to the last point, which is nothing but tax evasion. This is completely an illegal step. So you are a guilty party if you're breaking the law and ensuring minimum tax liability. A simple way of differentiating all the three is ensuring minimum tax liability by maintaining all the legal measures is nothing but tax planning. Ensuring minimum tax liability by bending the law is tax avoidance, and ensuring minimum tax liability by breaking the law is tax evasion. And like I said, tax management is nothing but ensuring or maintaining or managing all the three concepts. Now let's get into our topic for today, which is nothing but tax planning. Now, tax planning is very, very important if you're an individual watching this. You might be earning incomes, you might be a part of a business organization. So it's very important for anybody to understand this concept because it's a very, very important concept with regards to everybody's livelihood. Now, in tax planning, we use various benefits provided by the government to ensure that we minimize our tax liability towards the state revenue. So, which are the different benefits provided? Let's find out. At first, let us talk about tax exemption. Now, tax exemption being one of the four measures or benefits provided to us. Tax deduction, tax rebates are the other two, and also there is something called as tax relief. Well, let us discuss about tax exemption first. Tax exemption is nothing but the income you have earned through a certain means, which is considered to be tax exempted by the government. Well, you don't have to pay any tax for that particular income. The best example I can give you is our government putting on tax exemption measures on farming income. So if you're a farmer and if you've earned income through farming, well, it could be 5 lakhs a year, it could be about 10 lakhs per annum. You don't have to pay any tax for that income. So your annual income minus your tax exemption is equal to your gross annual income. All right. So your gross annual income is nothing but your tax exemption amount reduced from your annual income. Now it doesn't stop there. Let's get down to the second part of it. There's something called as tax deduction as well. What exactly is tax deduction? Well, as an individual, you might be investing in certain insurances which are necessary for your survival. So government understands these concepts and give you tax deduction. So those interests or whatever amount you invest or which are used to invest into such measures or such schemes can be waived off from taxing as well. So your tax exemptions are reduced from your annual income, which gives you the gross annual income. And then further, your tax deduction amount is further reduced from your gross annual income, which would eventually give you your net annual income. Now, it doesn't stop there as well. There is something called as tax rebates. So let's talk about the third part of tax planning, which is something called tax rebates. What exactly is tax rebate? Well, government has ensured there are different slabs of the income generators. So if you are earning a certain income, then you are liable to pay a certain amount of fee as tax. To make it very simple, more your income, more your tax liability. So depending on your slab, you'll be charged a certain percentage of your annual income, your net annual income, as your income tax for that physical year. So you need to plan your income out in advance. So, for example, when you're in 2021, if you are paying your income tax for 2021 2022, which happens in the year of 2022, well, you have to plan that out right from 2021, which is very, very important because we need to know that whatever spendings or whatever earnings we make, whatever spendings we spend, whatever earnings we make are adjusted in such a way that we tend to enjoy all forms of tax benefits from the government, such as tax exemption measures as well as tax deductions. Now, right after tax exemptions and tax deductions, there would be a tax rebates, further which there's something called as tax relief as well. What exactly is tax relief? Now, this is mainly applicable to business firms and organizations because there will be certain amount of investments which they have to make in order to ensure that there is smooth running of for the organization. One such example would be the expenses spent on transportation, which could be waived off by the government as well. So that would further reduce the taxable income. So when you combine all the above, you create a better plan, a much better plan, which would ensure that you have minimum tax liability towards your government. So I repeat once again, tax planning is nothing but you ensure that the taxable income at the end of every fiscal year for you as a business firm or as a person is reduced to the largest extent so that you enjoy maximum benefits and to which you can actually avail or you can actually enjoy all the benefits which are given to us by the government. Now, also, one good other examples for business firms. If you're a business firm and if you're watching this right now, well, if you want to actually reduce your taxes, well, there are other economic needs as well. Maybe there are special economic zones set up by the government to ensure that you so if to ensure that there are further investments coming into this particular economic zone. So if you are an investor and if you could invest in these economic zones, then you tend to enjoy tax benefits there as well. So there are different ways of tax benefits. So by enjoying all the tax benefits, you are liable to pay minimum tax amount every single year to plan it out in a proper way. You gotta planning this income in a proper way to ensure that you pay a minimum liability amount. To pay a minimum amount as your tax to the government is nothing but tax planning. So in the next edition of IndiaMoney.com, I will tell you how to plan your tax and how to ensure that this works out practically as well. So till we meet next time, it's me, Vivek Bhaskar, signing off from IndiaMoney.com. Thank you for listening and tune into us so that you enjoy better sessions coming up in the coming days. Thank you so much. Namaste.